Hey, this is Matt from InvestiQuant. Today is Thursday, October 6, 2022. Yesterday was a big day for the markets. We had a sizable down gap. The S&P gapped down nearly 43 points at the open. But after a test lower early on in the session, buyers became aggressive and ran it back up to the prior day closing price and beyond, filling that sizable down gap that we saw yesterday. And that's a pattern that we can look at this morning, and that's what we'll be studying here in Discover. Let me go ahead and get it set up. I'm going to grab all four instruments. Our setup is based upon entering long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, the overnight session is testing lower following yesterday's activity. So I'm going to go to the opening filters, gap direction, and I'm going to click on gap down. The next thing I'm going to do is go to the price patterns library, and I'm going to grab this price pattern based around yesterday's sizable down gap that filled, and it's going to be available in the active today. It's going to be the bottom option down here for unique moves. Day after largest down gap to fill in 20 days. So that comes from our unique moves category. If I scroll down just a little bit, there you go. You can see it right there. And then next thing I'm going to do is go to the indicators library. We closed below the 200-day simple moving average yesterday. We closed above a 10, but I'm going to leave just the 200 on this one because this is kind of a rare pattern. So I want to keep as many samples as possible. So I'll just use the 200 for this one and then click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping down, and the prior session was the largest down gap to fill of the past 20 sessions, and it closed below a 200-day simple moving average. Historically, we have 24 samples in the S&P, 22 in the NASDAQ, 25 in the Dow, 30 in the Russell. Win rates on these are all pretty weak. S&P very weak. Only 17% of the 24 samples closed above the opening print the following session. For the NASDAQ, it was a little more neutral at 45%. The Dow, 32%. The Russell, 30%. If we look at the average moves, average win on the S&P is larger than the average loss. For the NASDAQ, the average loss is larger. For the Dow, the average loss is larger. And then for the Russell, the average win is larger. So we're mixed on the average moves, but all four of them have pretty weak win rates, with the S&P being the weakest of the group at just 17% of the 24 samples. So not a huge sample size, but those win rates are all very weak and all in agreement there. So historically speaking, this pattern has been more bearish the following day. Hopefully found that helpful. Good luck today. We will see you next time.